Hey guys, today I figured I'd make a video on how to find the best time frame to trade on. Now, as everyone knows, not all assets move with the same percentage. Some can be very volatile, some can be not so volatile. We also know that not every trader is the same. Some prefer to stick to long-term trades and some go as low as 1 minute time frames to scalp. So this video, I hope to show you guys how to find the best time frame that works for you for a particular asset. And what we're going to be doing is using the process of elimination to find the best time frame. Now, the first thing you want to determine is what type of trader are you? Are you a long-term trader? Are you a swing trader? Or are you a scalper? Now, scalping is 1 minute chart swing, usually using hour charts. And a long-term trader, you're basically looking at just these three. So spoilers, if you're a long-term trader, you're just going to be using the day, the week, or the month. There's not really much more to that. Because the other thing we have to find out is, besides what type of trader you are, it kind of goes hand in hand, but we also need to figure out what target you have. Now, I scalp and I swing trade. I don't really do long-term trades because I don't have the patience for most of those to work out. So I like swing trading and scalping, and with that I usually aim for a 1% or more profit. And using a 1-to-1 risk ratio, that means I either make 1% or I lose 1%. So finding an asset that I can trade with 1% or 2% gains or losses can actually be kind of hard. And that's why I actually developed this indicator, and I'm going to leave a link in the description for the source code. It's really not that complicated, and you can recreate it in any trading platform, trading environment. Or sorry, I should say charting platform or program. I use TradingView. It's free, and you can just copy this into TradingView and you'll see exactly what I see. But anyways, okay, what is this line and why is it here is probably what you're wondering. So after you've found your targets, which I can't really help you with because everyone's targets are different, everyone's risk to reward ratios are different. My tolerance for risk might not be what your tolerance of risk is for. You might not be happy with 1% gains, you might be wanting more than 1%. So if you're a scalper, I don't really know if you can consistently get more than 1% trades. It's kind of hard. You're going to be having to trade something really volatile like Tesla, but it definitely can be done. Like right here, a nice 2%, you just use a simple RSI divergence like so, and you could have picked up, what is it, 2% if you caught the bottom and the top. So it's definitely not impossible. Now, I made a Medium article which kind of goes into more depth, but I'm going to make it really simple for you guys on this video. This black line down here, it measures the average movement between bars, 55 bars back. You can see that by setting it to 55. That's what I have it on default. That's what I've found to work best for me. Maybe because it's a Fibonacci number, whatever. I'm sure if you backtested very rigorously, I'm sure if you backtested to ridiculous extents, you would find a better working number, but 55 is what I have it as. Anyways, now that you know what this line down here measures, I can go ahead and tell you what these different shadings mean. To make it really simple for you guys, if you're a scalper, if you're looking at 1%, 2% winning trades or losing trades if you lose, you're going to want to find a time frame where this black line is within this green zone down here. So Tesla during this period, during November, is a perfect opportunity to trade in the 30-minute time because you're looking at movements of 1% or 2% or more. Now, if you're a swing trader and you go to the 4-hour time frame, now, normally I would say the red zone should be reserved for long-term traders that will be trading on the day time frame. But if you're someone that likes a lot of risk and a lot of reward, then you can swing trade with this in the red zone. But normally I would say if you're swing trading on 4 hours, if you're looking at between 5 and 10% movement, 5 or 10% swing trades like this, that's 8%, perfect example right there. You want this line to be in the orange zone. Now, finally, if you are a long-term trader, which I can't speak with much experience on because, again, I'm not a long-term trader, I would say make sure this is in the red zone. Now, I'm pretty sure every single stock is going to be in the red zone. Okay, no, I take that back. Now, you see things like Visa, it doesn't really get into the red zone because it doesn't move a lot. I mean, it makes a strong march up, but it's really not going to be moving all that much. So if you're a long-term trader, which I don't even get that, because I mean, trading is like you're trading stuff, but I mean, whatever. If you're a long-term trader, I would look for something in the red zone. I mean, because here you have Visa, it's in the green zone, and I mean, you're looking at 10% over, what is this, over one-third of a year. You're looking at a 10% increase. Now, that can be fine if you are a very long-term trader that doesn't take a lot of risk, that doesn't expect a lot of reward. That is perfectly fine. I mean, who's going to complain about 10%? But if you go back to Tesla, you can see that you could get 10% in just one day or over like 2 days. See, 3 days, 6 days, 24%. So 3 days, 10%. So just to quickly recap, if it's in the green zone, it's good to scalp because you're looking at movements of around 1 to 2% per trade. If it is in the orange zone, that's not in the orange zone. If it's in the orange zone, like around here, it's good for swing trading because you're looking at 5 to 10% per trade. And if it's in the red zone, you're looking at, not a range. If it's in the red zone, which Bitcoin is going to be very skewed because of its ginormous pump right here. Let's find a better example. Let's say EA maybe? Okay, EA. If it's in the red zone, it's good for long-term trading. And you should be expecting long-term trades of 10% or more in the long term because, I mean, who's to say how much a trade should go on for? I don't even know if there's really strict parameters to define a long-term trade. But basically, that, I mean, if it's in the red zone, it's going to be moving 10% or more. And if you're a long-term trader, that's what you should be looking for. So yeah, that's going to be it for this video. If you have any questions, comments, or ideas, the best way to get in contact with me is through Twitter, because YouTube comments can be kind of iffy. They sometimes just disappear into a void. I can't reply to them. If you like this content, if you want to see more, feel free to subscribe. I try to make a video like this once a week at least. But other than that, I guess I'll see you guys next time.